Well, hello members. With Brexit on Friday, it's probably worth doing a wrap up here on what we're doing with our cradle-to-grave series. We've got two stocks in that series that we're watching, monitoring, and trading. One being Equifax, the other of course being gold, GLD. Let's take Equifax first because it got hit just like all stocks did, down 3.84% on Friday. Fortunately, as you know, we took profits the day before, partial profits that is. This is a long-term position. It was up at the highs. We took profits into that surge. That was the place to actually take some if you're going to take some. And you can't trade these things, blindly and just stay in them forever. You've got to take some profits as it comes up and hits. This market pulls higher, comes back, pulls higher, comes back. And these strong stocks, even though you can trade them long, you have to be willing to take profits into strength because they're going to come back at some point, and certainly on Brexit they did. So Equifax trades lower. Now the question is, where will it trade to again? Look at the volumes on this pushback. Look at the volumes on that surge. That's a good sign. That tells us that, yeah, this is still worth trading. If we bring the weekly over, in other words, worth holding. If we bring the weekly over, take a look at it. What we can see here on the weekly chart is that as we come back into these lows, that's going to be a key area to think about support and think about buying it. That price point, 120 and a quarter. The top here is 122.55. We close it at 122, so that 120 and a quarter is the first place to think about it. Once we get past that, then it's all the way back down into this previous swing point high and the low of this big volume bar. That's about 115. So the 120 area is where we're going to look, somewhere around 120 and a quarter. So that's what we'll be doing there. Now if we turn our attention to the other position in the portfolio, it's gold, GLD. A big volume spike, gets over a prior high. It wasn't a swing point high, but it reconfirms that it's going to try to stay higher. Now the issue with this is that we'd already had this signal suggesting that we'd get some sort of a retrace sideways move. We got that, right? And we didn't get more on as a result of that, thinking we'd get more consolidation. But we have an outsized long position already. That's a good thing, and that happens to be where we're sitting with this and why we continue to sit with this, because we think that this has made a major turn. You get a breakout on the weekly as it gets over the swing point high, and if we pull over the monthly chart, right on the monthly chart, we're seeing the same sort of thing, that continuation pattern. If we close up here, we're going to get a breakout on the monthly too, which again bodes well for the long term. So just a few days left in the month. We want to see how that month is going to close. That's Thursday this week. Once we see that, we'll have a better understanding of whether we want to buy on any kind of small dip up here at the highs versus wait for a little bit bigger of a retrace. So let's evaluate it as the week goes on and decide what to do. As for the rest of the portfolio, as you know, we've got, given the broadcast this morning, we've got some stocks that we're going to want to push out on the push back up. Those things that are not related to gold, even though they're commodity based, because we're probably going to see strength in the dollar, we'll be doing that. And essentially we'll be focused on buying some buying some longs on the dip, on the short pullback. And we'll be looking to add to our metals position on opportunities. That's it for today. Thanks, and I'll see you next time.